Hello guys. Today in this video we will discuss major tax highlights of Interim Budget 2019. Currently, the Section 87A provides relief of up to 2,500 rupees to a resident individual if his total income does not exceed 3,50,000 rupees. The relief under Section 87A is proposed to be increased to 12,500 rupees, which shall be available to those resident individuals whose total income does not exceed 5 lakh rupees during the previous year 2019-20. If taxable income marginally exceeds the limit of 5 rupees lakhs, the tax liability increases considerably. As the slab rates have not been tinkered with and the relief is provided by proposing amendment to Section 87A, the taxpayers would be at disadvantageous position. It is proposed to increase the limit of standard deduction for the salaried taxpayer from existing 40,000 rupees to 50,000 rupees. The benefit of increased standard deduction shall be available to salaried persons and pensioner. Threshold limit for deduction of tax from interest, other than interest from securities, paid or payable by a banking company or cooperative bank or post office is proposed to be increased from 10,000 rupees to 40,000 rupees. Every person, including an individual or who are subject to tax audit, shall be required to deduct tax under Section 194I from payment of rent. The tax shall be deducted if the amount of rent paid or payable during the financial year exceeds 1,80,000 rupees. This threshold limit, for deduction of tax, is proposed to be increased from 1,80,000 rupees to 2,40,000 rupees. Any long-term capital gains, arising to an individual or HUF, from the sale of residential house property is exempted to the extent such capital gains are invested in another residential house property. The taxpayer is allowed to invest only in one residential house in India to claim Section 54 relief. The Finance Bill 2019 proposes to extend the exemption for investment made, by way of purchase or construction, in two residential houses provided the amount of capital gains does not exceed 2 crore rupees. If the assessee exercises this option, he shall not be subsequently entitled to exercise the option for the same or any other assessment year. In other words, the assessee can exercise this option only once in a lifetime. If an individual owns more than one house property for his own residence, then only one house property, as per his choice, would be treated as self-occupied and its annual value is deemed as nil. The other house property is deemed to be let out as per Section 23 and notional rent of such house is taxed under the head house property. The Finance Bill 2019 has proposed to amend this provision by allowing an option to the assessee to claim nil annual value in respect of any two houses declared as self-occupied. In other words, a taxpayer can now claim that he has two self-occupied house properties. Consequently, deduction with respect to interest on borrowed capital can be claimed with respect to both the houses. However, the aggregate monetary limit for the deduction would remain same, that is rupees 2 lakh. The Finance Bill 2019 proposes amendment to the Indian Stamp Act 1899 for better administration of stamp duty collection on securities market instruments. It proposes that stamp duties would be levied on one instrument relating to one transaction and would be collected at one place through the stock exchanges. The duty so collected will be shared with the state governments on the basis of place of domicile of buying client. The Finance Bill 2019 seeks to amend Section 83 of the Prevention of Money Laundering Act 2002 so as to extend the period of investigation from 90 days to 365, during which the attachment shall remain valid. It also provides that in computing the period of 365 days, the period during which the investigation is stayed by any court shall be excluded. To promote Make in India campaign, the Finance Bill 2019 rationalizes customs duty and procedures. The custom duty has been abolished on 36 capital goods. Thanks for watching. Do like the video and subscribe to our channel. If you have any query, you can mail at cablogindia@gmail.com or WhatsApp at +91 8448 379 180.